Hello, everyone. My name is Rachel Perkins, and I chose to complete my project on CVS Health Corporation and Morningstar's analysis of this company. So to get started, we are going to look at the company profile. So CVS Health offers a diverse set of healthcare services. Its roots are in its retail pharmacy operations, where it operates over 9,000 stores primarily in the U.S. CVS is also the largest pharmacy benefit manager, acquired through Caremark, processing over 2 billion adjusted claims annually. It also operates a top-tier health insurer, acquired through Aetna, where it serves about 24 million medical members. The company's pending acquisition of Oak Street will add primary care to the mix, which could have significant synergies with all its existing business lines. So yeah, that's a little bit about the company, and this is actually why I chose to study this company. CVS is a pretty well-known pharmacy here in the US. It's a retail pharmacy, and with them expanding, I just thought it would be great room for growth and something that we could look into together. So up here at the top, we see our quote, and that's the last price, so $74.61. And CVS is beneath the healthcare sector and is beneath the healthcare plans industry. I want to take a look over here at the price over sales, and that's 0.30. And initially, what this value is it represents the amount an investor is willing to pay for a dollar generated from CVS's operations. So that's what that 0.30 represents. And then I also wanted to take a look at this market capital here. We see it's 95.6519 billion, which is quite large. And this market cap right here just shows how large the company actually is. It shows the size. And I also wanted to look at this yield down here. We see it has a yield of 3.55%. And this is what dividends are expected from the stock. So this 3.55% is what you can expect the dividends from the stock to have. So yeah, that's kind of what I wanted to touch base on there. And now we're going to scroll down to Morningstar's analysis. So first and foremost, Morningstar gives CVS a 5-star rating, which means it's considered underpriced. So Morningstar thinks that you're getting kind of a deal with this one. It's underpriced for what it is. It should be priced higher on the market. So take with that information what you will, but it definitely seems tempting to buy, and we will see all the more reason why to buy throughout this. We see CVS is also at a 34% discount here. And here's just a summary, and it goes on to say that CVS is expanding, which allows for lots of room for growth, especially as they are dipping their toes into the primary care. So that's pretty awesome. We look at the competitors here, if they would load. Okay, great. And we have CVS, our company here, and then we're looking at the Cigna Group, Humana, and United Health Group. So looking at these competitors here, CVS's price is pretty low compared to its competitors, which again, all the more reason to buy. And we can see how it stacks up. I would also like to add, again, with that low price, Morningstar gave CVS 5 stars, and its competitors received 4 or 3, meaning they were priced pretty adequately, but CVS, you might be getting the best price for this industry and for growth. We're going to take a look at bull say and bear say. Initially, what this means is bull say is whenever people are leaning towards buying. Investors that are on the bull say side are leaning towards buying. Bear say are leaning towards selling. I'm not going to go over every point, but a few points that stood out to me, or a couple, was right here, CVS's diverse operations create the opportunity to view a patient more holistically by managing both medical and pharmacy benefits, which could lead to revenue and cost synergies for the organization. I think that's a great point on the bull say side of things, considering it is talking about that growth that is going to bring in more revenue. Over here for Bear Say, I think a great point that they make is that investors continue to wait for double-digit earnings growth at CBS, which is an industry standard that has been delayed time and time again due to acquisitions. I did read this a little bit deeper within this analysis that they have been trying to acquire these double digits for quite some time. However, that may be appealing for some that want to buy and wait it out. It doesn't necessarily mean sell. So, here we have the chart for price versus fair value, and you could see it per year, and we kind of see where we're at right now. And there's the key, so you can kind of look. And here's the sustainability. Right now we are sitting at a 21.97, which is in the medium. It is on the lower side of that, but it is not low. Low would be 10 to 19.99. So we are medium here. And then in terms of controversy, we are sitting at a 3. 1 would be low and 5 is severe. So again, we're kind of in the middle of that. Buy at your own discretion. Everybody has different strategies. Here we have a chart for trailing returns. You could look at daily, monthly, or quarterly. And then here's some key statistics. Just to look at, again, the growth here, you get to see the revenue rate, all that good stuff here. So I wanted to take a peek at financial statements as well. We get to see the overall income statement and its summary. You get to see the revenue here, which I find to be pretty interesting. It's going up, so that's pretty good. Here's a balance sheet. Again, it shows the assets here for each year and the debts. Our assets are greater than our debts, so that's pretty good. And we have our debts divided by assets line right here. And then again, a chart for cash flow with operating, investing, and financing. And we have that for each year. Here we have a chart for valuation. It shows those price over sales, price over earnings for each year. And it shows our current, which is 24.79. Typically, you want to be between the 20 and 29 point for it to be considered fair or good. So for us to be currently sitting at 24.79 is pretty good. And to find that, you can calculate it on your own. Actually, you would just take the market price and divide it by the current sales price. And initially, what this value means is it's the amount of time to pay back. And down here we have our operating performance, dividends and splits, and ownership. So we also have our executive team down here, which is something that I find so interesting. So we see that Karen S. Lynch, age of 60, is on the executive team, and she's director, president, and chief executive officer, which we know is CEO. And beneath her, we have Sean M. Guarantine, who is 59. And this is the executive vice president and chief financial officer. So we see the CEO and the CFO here, as well as some other notable individuals. And I know in the chapter we referenced CEOs oftentimes being on this executive team. So here are key executives, and we also have our board of directors. Roger Farah is the chairman of the board. And then if we scroll down here, we actually see Karen again, Karen Lynch, director, president, and CEO. So our CEO is on the board of directors. So helping make the important decisions, right? Here you can see the transaction history, and then we are back to the company profile. So overall, I think CBS would be a great buy. I wouldn't say it's a strong buy necessarily by any means, but I do think it's a buy. You know, there's room for growth, and you know, some people might see this and hold off, but I don't think it would be a sell. There's just so much room for growth, and with their rating from Morningstar, considering this is a 5-star rating, meaning that this is technically underpriced for what you are getting, I definitely think it's a buy. And again, lots of room for growth and all kinds of revenue coming in. So I think CVS would be a great investment. Hopefully this video was very useful and y'all learned something. And yeah, I hope everybody has a great week.